Hello, hello, hello. Mic test. So, hello and welcome, guys, to our 121st edition of the Trading Opportunities webinar. This is Nirav, and before we continue with the actual webinar, let me give you a very, very quick introduction. So, here, this is our 121st edition. What we do in these webinars, we discuss live charts because the markets are currently running, and see, as the name suggests, trading opportunities on these charts. Before we move further with the current discussion, I would like to quickly point out that four of the trade setups which we discussed in the last webinar have played out, as well as the fact that one second, I just did not start the yes. So as I was saying, four of the setups for our from our 120th webinar have played out, and overall 297 setups have played out in the 120 webinars that we have conducted so far. Those of you who are joining in for the first time or watching it later as a recording should note that we conduct these webinars every Friday, right? So if you want to join in, you can join in on any Friday at 2 p.m. GMT or 7:30 p.m. IST. These are the timings. You can just convert it to your time zone, and you can come in and have a discussion with us live in the chat, right? So that's about it for the way these webinars are conducted. A little bit more about my further work. As you guys already know, I'm also the author of Think with the Markets, which is currently available on Amazon's Kindle edition. So you can have a quick read at it if you want. Also, for those interested in learning the way which I use, which is Elliott Wave or advanced form of Elliott Wave, we have a course covering basic to intermediate stuff, and it has 1600 plus students and good feedback. If you are interested, you can check it out on my website. Middle link on the website. If not, then I highly advise that you check out the free video course, for which the link is available in the video description and will also start scrolling at the bottom of the screen. That will allow you at least to understand and make sense of the things which we are discussing in these webinars. Right. Moving forward, I'd like to give you a quick look at the work I have done in the past. Over the years, I have kept a track record of all the videos and live webinars which I have done. And as you can see, we have here a compilation of the forecast accuracy, which has stood higher than all industry standards and is consecutively 80% plus for 6+ years. As you can see, this is all a public record. All these webinars and videos are available publicly on the YouTube channel 50 Years Market Analysis, my YouTube channel, and you can just check the record of it. Just check the date, instrument name, what was discussed, did it play out or not, and check the video yourselves by clicking this link. So it's all there. And as I just mentioned, and I like to re-mention again, this is how much higher than all industry standards and is consecutively 80% plus, which is rare in this industry. And I personally have not seen someone else with a public record like this. So that's about it for our accuracy part. Lastly, those joining in for the first time, this will be the sequence. We'll discuss euro, following it by crude oil, gold, S&P, Nifty, and in the end, we'll discuss the chart of Bitcoin. So this webinar is broadcastedly simultaneously on my YouTube channel 50 Years Market Analysis, as well as the LinkedIn page. For that, the link is again in the description. With that being said, let's now head over and continue with our discussions. And the sequence will remain the same. We will first check the chart of the instrument, and then we will check the we'll check the recording of what we said in the last webinar, and then we'll check the actual chart. So with that being said, let's head over and see. So here is the recording from our last webinar. Let me see 1 second here. Chat. So hi Sandeepan, how are you doing? And hello Matthew. Right. So now let's now that we have a confirmation, everything is working from the audience side as well. Let's now head over to our discussion. So this is the discussion on euro. As you can see, everything is time-stamped. If you want to check it yourselves, you can just head over to the live section on 50 Years Market Analysis YouTube channel, click on 120th webinar and check it. So I'm not going to go through the whole discussion. The point is just to check what was being said, rough idea. So the main theme was that I will consider shorts below 1.06225. That was the main idea. And if the market sustains above 1.06612, specifically above this white trend line, as is pointed out with this drawing, then we will be looking for longs. This was the main theme. Now, heading back to our actual chart, let's see. Here it is, Euro. So SPX has already hit our target. We'll check that when we reach SPX. I think I should trail it. But anyways, so for now, we are on this chart of Euro. And as you can see, it is still sustaining above this level of 1.06625, which I had suggested that if it sustains above it, then bullish scenario is maintained. However, I personally have added a small amount of short position in it. The reason being that the market has spent a lot of price action here, and it is suggesting that this count of wave one up and two down is just not going to work out here. It is most likely going to break this low 1.06058 something, right? So if that happens, then this market is most likely continuing the wave B progression, which we have considered previously as completed over here. What I'm talking about is if we look at the market from this point of reference, the price level is around 1.11397. Here we can say that we are in a corrective structure to the downside, and a correction can become minimum at least three legs we are looking for, and these three legs were complete here, right? That's why we considered the possibility of upside. However, it does look like it is possible that this market is giving a complex correction. Perhaps this leg down is not complete here, but is continuing sideways. So what I'm really saying is that something like this, and then another leg down. So we are possibly in this phase, sideways phase. I can draw it with a box here, right? So with that being said, that the market is then expected to go lower. However, the problem is that it can go back inside this box and spend more time doing sideways and complex structures before heading lower, right? So I have taken a kind of a risky trade here. That's why the position size is not full on, but overall, I do believe that the updated view now is unclear, but I'll discuss both sides here. First view is that we can see market continuing the sustenance of sideways movement within this box range and then head lower. It can also directly head lower. That's what we call our H1, that the market is going to either go low or do some sideways movement and then go lower, right? And the second view is more or less the same, that the sideways movement completed over here. And from here, we have a one up and this is a two down. Looks less and less likely, as I just mentioned before. And hence, it will now become our H2 because it is following less of my outlook on this chart, right? So that being said, if somebody is not in this market currently, the best way would be, as per my understanding, to wait for this market to clearly take out 1.07619 to the upside. And as far as the downside is considered, it remains more or less the same. 1.06225. So let me just push it here. So below this, we look for shorts, above it longs. Anything in the middle should be smaller size position, or if you have your own reasoning, then well, that's that. That's about it for our discussion on Euro. Those of you who are in the live chat, if you have any doubts or questions, you can just post it in the comments or I mean the live chat itself. Otherwise, we'll move over to our next chart of CL, which seems to be moving as per the counts which we discussed in the last webinar. And here is the quick look at the chart. Let's see where CL was discussed. So somewhere around here, I guess. Right. So here it is. Let's see what was being said on the chart of euro in our last webinar. And after that, we'll check our last current chart or live chart, I should say. So in the last webinar, there was a clear view I had, which was that I will be looking for scalp longs on this counter. As I had discussed it, again, you can check the whole recording yourselves. The discussion starts around 11, goes till 16. So scalp longs were there. And other than that, I had very clearly mentioned that I'm not going to go heavy on this. I'm only looking at short-term positions right now. Right. As far as what is the position on euro, I just discussed the chart, right? And if you'll, so what will happen on DXY is a prediction. If you are so sure, you should take the trade, but do not make certain statements. Nothing is certain in trading. But then again, if you are certain, take the trades. Don't guide people in the chat. They are just here to check the Elliott Wave analysis, not what the rate cut is going to happen. 1 second, I'll just mute the speaker here. So as I was saying, the view was not 100% clear, so only scalp longs were expected. Other than that, the secondary view, as you can see, and the primary view both were pointing in the other direction. So there was a bias for swing longs on this counter, but we were not 100% sure. So minor positions only kind of situation was there. So count-wise swing longs and scalp longs we had discussed. Now here is the live chart. Let's go to first of all 21st. So 21st June is when the last webinar was conducted, around here somewhere, roughly speaking. And let's see what has happened since then. So since then the market has gone up. That scalp setup did actually play out, but let me just check it, double check it. 82 plus level. Here is the live chart now. Yes, there it is. 82 plus level. It has gone up after that. And I currently don't have any positions on CL. The view was, this was my last count update, was basically kind of, the update was basically that we are still considering bullish scenario. And let me update this here. So the expectation is that if the market is continuing upside movement, then we want to see sustenance above this dotted red line, right? This is kind of what you call an important line here. This is coming from a higher time frame chart. Let me show for a sec here on the daily. There we go. So here's that trend line which I was talking about. And the second thing to note here is that if we are going to go bullish on CL, then we definitely need to see sustenance above it. This is basic price action analysis, nothing very complex or nothing to do with Elliott Wave at all. So the ideal scenario in this kind of situation would be to see if the market goes above the trend line, pulls back, and that will give us an ideal setup. Most of these times, the ideal setups they don't play out; they are just theoretically there, right? So in this case, that is our ideal setup. Now heading back to our 15 minutes chart and seeing the current progression. So as I mentioned, if we want to see sustenance above this or upside, then we want sustenance above this red trend line. Currently, what we can see is not a bullish sign or at all, because not only has it gone lower than the trend line, it is going in a bit of a swift manner, which is not a characteristic trait for bullishness as of yet. So first thing is I'll just place an alert near the wave to low, and if it goes below it, then we stop considering the bullish count, at least temporarily. Second thing is it's not a straight of long, even if we take out the last high around 82 point, what is this? 83.035 roughly speaking, then even then we want to see a pullback which will confirm sustenance. And only once the market takes support here and then gives a break of the last high, can we say that we have some sort of clear activity and some sort of bullishness in the counter, right? So CL wait and watch kind of market, I do not have any place on it, and it can develop and become more complex because, as I mentioned, we have a long-term resistance incoming. So near these regions, you can expect some sort of volatility increase and a lot of choppiness can also be there. So I'm not trading this counter just yet. Nothing much to add. Probably we'll have some more clarity in our next discussion, right? So that's about it for our discussion on euro. And one thing I forgot to run the bottom part. So those of you who are joining us for the first time and do not know the concepts of Elliott Wave, which I do use for my trading and analysis, there is a free course which is available on the website 50eyes.com, my website basically, and no registration is required for it. So you can just check out the link directly and go through that free video course. That way you'll be able to understand these concepts which I'm talking about, or applying actually, not talking about, much properly and make some better use of what we are discussing here. With that being said, let's now head over to our chart of gold. And let's first quickly have a look at our last discussion, which was done somewhere over here. Let's see what was being said on gold. Yes. So there were two views discussed. I remember I had a long position on, which was actually stop loss hit right after the webinar, right? So the main two views were that first view was that this market has given a low around 20 to 89 and it will now head higher. Our stop loss was around 23.16 something roughly. I don't exactly remember, but I had a minor long on at that point in time. That was the first view. Second view was that if the market is not heading higher and is continuing the downside movement, then we are possibly looking at a diagonal in play. And a diagonal in Elliott Wave terminologies is a five-wave progression with the 4 and 1 having an overlap. There are some other rules, but these are the main guidelines. Let's now quickly look at the actual chart. So what I am seeing here is most likely the continuation of the diagonal count, right? So those of you new here, you can think of diagonal like this. I'll just draw it in the rough right hand side region. Right. So this is what you call diagonal in Elliott wave terminology. Is the first leg down is called a wave one. Correction up wave two. Next leg down is wave 3 and 4 and 5. Right. Main characteristic trade is we want to see an overlap between the fourth and the first. And we do have an overlap between the fourth and the first. So our diagonal count does seem to be playing out just as of now. We can say that the last leg down is still remaining, which should at least take out the low of 2286. So we expect the market to go lower than this level if this count is playing out. One second. Right. So that is our main take on gold or main analysis. Invalidation, of course, we have to discuss when we think this market is not doing as expected. Will be once this market tries and sustains above this level or this trend line, I should say. So if the market goes higher without taking out this low and then sustains above this trend line, something like this, then this will invalidate our bearish count, right? And at that point, actually, we will be considering long trading opportunities instead of what do you call bearish opportunities. And as far as the trades are concerned, we were actually able to capture this leg down in our live Slack group. Here is the quick update on Slack, which I had posted. Bearish count, added minor shorts, expected progression, and so on and so forth. So that's the take. We were able to capture this leg down in our own trading. It's funny, where did I exit? I remember. Okay, I posted it probably in the wrong channel. Okay. Anyways, so that was a very quick trade. That was also not a very big position, right? Because there is still some unclarity here on this counter. We can say that this hypothesis looks really good and all, but overall there are two or three more possibilities which are possible actually on this counter. So that's why I'm currently trading smaller positions on gold. With that being said, I guess we are quite clear. That's our main view, looking for some more bearish activity on this counter. And I currently do not have any short position. We'll look to add small and then create or build up on the short side because of the take or the count, right? And we have discussed the counter view, the trend line, sustenance above without breaking the low. Minimum target is below 2285. So 2285 and lower levels. So again, if you guys have any doubts or questions on this counter, you can just post them in the comment section. Otherwise, we'll move over to our next chart. And by the way, our next target or target 2 is 2262. Right. So these are our two main levels which we'll watch out for on this chart. With that being said, let's head over to our next chart. And before that, very quick request, guys, if you are liking the content, do not forget to hit the like button. And much more importantly, kindly share the content. Our last broadcast did not even cross 300 mark. So definitely the people who are even the regular audience are not doing their part. So kindly do it. We want to see this chart going up, not down like gold in the short term. Right. With that being said, let's now head over to our next chart of S&P's 500, which is going to be discussed right after we take a look at our past webinars discussion. So here is the past webinar, and somewhere around here we discussed the chart of S&P. So let's see what was being said on this chart in our last webinar conducted on 21st of June 2024. So as you can see, we had a very clear count. We were expecting wave 3 is complete. We were expecting a fourth wave in correction. Let me play this video. And once this wave 4 correction is complete, you can see with the arrows that we will see, or we expect the market to go up. So I was basically waiting for a long trading opportunity on this counter on S&P's 500. And let me see if there's something else discussed. Not really. So we were having some downside levels, and once the market touches those levels, or even before that, it could complete the wave 4 and then head up. That was the main count. So we were looking for longs. You can check the whole analysis later in your own time. Now this is the current chart of S&P 500. I do have a long position on this counter, and it is working out. All I need to do is now at this point is adjust my trailing stop loss, which I'll do right after this webinar. For now, alerts will have to be enough. So anyways, this was the price somewhere around, let's see, 21st June. Somewhere around here was the market's price when we were discussing the last webinar, and we had considered this as the 3. And the expectation was something like this zigzag. And it could also take other formations like a flat or etc. etc. It does look like it has decided to go with the complex or flat kind of correction here. So never mind. Our main theme was that if the market sustains or takes support at 5441 or above it, then we will consider longs. So my longs were trigger, and I entered. Let's see. There is the entry in our Slack group. Added minor longs. Let's see, when was this? This was when the price was trading around 5510. Not the best of entries, I think, but given this kind of count, that is fine enough. So 5510 is our entry, and the market is currently a little bit above it. So what's the immediate target? Immediate target is this alert at 5540. Right. And if the market sustains above 5540, then I can look for adding further longs right? As a matter of fact, because my entry is late at this point in time, I will look to exit partial position so that I can manage my risk on this counter, or actually eliminate my risk, right? So with that being said, the theme remains S&P is currently in a sideways movement for wave 4, or the wave 4 is complete. Both possibilities exist. If the wave 4 is complete here or wherever it is, then we can see market flying higher. That's our first take. Second take is if the 4 is continuing, then it can go and sustain within this box range 5540 to 5453, right? And after that, it can just go up. Both possibilities remain bullish. Swing longs on this counter remain, or view remains swing long on this counter, right? With that being said, if you guys have any doubts or questions on this counter, you can post them in the live chat. Otherwise, we'll move over to our next chart of Nifty followed by BTC. I seem to have missed Luis's comment. Hello, Luis. Good morning to you. And here is Marco. Hello, Marco. You're welcome. Right. On SPX is the ABC, which level Fibonacci is the rules. So, Marco, I will not be discussing the Fibonacci rules, etc., because that will kind of become a class. But I do know you are in the video course, so you can just go right there and check back the Fibonacci ratios plus trade setups module. I think it's the fifth module or sixth, perhaps. Right. Marco is from Italy. Nice to know that. All right, guys. So that's about it for our discussion or quick take on S&P's 500. And those of you who are joining in or have been joining in for quite some time, again, a very small request: do not forget to hit the like button, and much more importantly, kindly do share this webinar in your circles, your social media groups, or traders groups, whatever you are using, because we definitely need to see an uptrend in our views and subscribers, just like the chart of S&P's 500. Right. So with that being said, let's now head over to our next charts of Nifty 50, which will be followed by BTC. And actually, Nifty also worked out as per our analysis. Let's see what was being discussed in the last chart here. Yeah. So this was the last discussion on Nifty 50. We were of the look or outlook that this market is possibly going to give us a corrective move in the downward direction, and then this market can head higher. The formation was a possible diagonal structure, as you can see with these white arrows, and this is the bad drawings suggesting that we are going to see a C leg from for the correction, right? So that was our take on the Nifty counter. Now let's head over and see the actual chart. Here is the chart for Nifty. Let's see which what happened. This was 21st June. So the market did form the diagonal structure, which was in the last discussion. It did give the correction as well. And by the way, if you guys remember it, if you don't, I'll just quickly go over the webinar. Let me play it. And we have discussed the strong bullish outlook. I had this alert around, let me zoom in. I had this alert around 23567, as you can see on the right hand side. And once the market takes out this level, then we will consider long trading opportunities, taking out new upside levels. Actually, it's 23585 plus. Yeah, so that's what I wanted to show. The trade setup was we are considering longs above 23585 level, right? Now, with that in mind, now let's look at the actual chart. And here is the price of 23585. Not only did the market go above it and made new lifetime highs, it was a rather simple setup. Even a minor stop here would have worked. But then again, that's expected in a exceptionally strong bull trend. These kind of things are generally expected, right? So that's about it for our last look on Nifty, right? It has worked out from the suggested level. We have seen a rally of 580 points. And not only that, I was also able to capture this leg down, and I was actually trading it today, right? And also, of course, not to mention, I was trading the long side on this market as well. Lots of trades. This was exceptionally busy week, and the biggest profits were from my trades on Nifty as well as Bank Nifty. All of them are actually posted in our private Slack. Of course, if you want to get more details on it and what do you call, 1 second, what's happening here? Give me a second, guys. Anyways, so let's continue. So what I was mentioning is that if you want to see these updates live in the market, you can always just contact me via the contact us page at the bottom. And as far as this discussion is concerned, we are now looking at this top and considering it as a possible three, right? There are some other setups which can play out at this point, right? Considering this possibility, we are looking at two support regions here, and let me just quickly draw them so that we can discuss them more clearly on the empty chart area. So the first support level is coming around at 23982. Second one is coming around, roughly speaking, 23860. Right. So with these support levels in mind, the setup remains very simple and straightforward. We want to see market sustain and give a support, or consider the support level 1 or level 2, that is reverse from here or here. Of course, it can reverse from in the middle of these things as well, but we do not want any movement below 23860, right? If we do, then the count changes and it shifts to our another view, which I'll not discuss because it can get a little bit lengthy. So anyways, long story short is, if the market sustains above these levels, either this or this level, and then takes out these highs of 24141 or 24164, then we will be adding more longs or re-entering longs, I should say. That is our main take on Nifty's chart, right? Currently, I am not holding anything on Nifty or Bank Nifty here. The reason being that the possibility of this correction expanding to the downside is real, and the alternate view is suggesting that maybe that can happen. So overall swing bias remains bullish, right? But short-term bias can suggest or does suggest quick downside followed by upside. So keeping that in mind, if you are swing trader, then yes, as long as the market is about 23860, it's bullish, right? But in the short term, it can go lower and then higher. So that's what I represented with the yellow color. So that's about it for our take on Nifty 50. And if you guys have any doubts or questions on this counter, you can just post them in the comments section or live chat, I should say. Otherwise, we will now head over to our next chart and the last chart, which is the chart of Bitcoin BTC. So let's first quickly check what was being said on our last chart. Here it is, the chart of BTC. Let me clear the screen. Right. So let's see what was being discussed here. We were looking for one more leg down in our last analysis of Bitcoin. As you can see, is represented by these green arrows. And the price was trading around 63,700 ish level, right? Sorry, 60,176 ish level, right? So the idea was that the market can give some minor up movement followed by a down movement, or a corrective leg up followed by a lower leg. And we wanted to catch this leg to the downside. Now, looking at the actual chart, the market has actually indeed gone lower. There it is, the chart of BTC right now on screen. And let me show you by removing everything that somewhere around here we were discussing this market. So now, what's the updated take? Again, we were expecting a little bit bigger pullback here, I think. 21st. Yes, we were expecting a little bit deeper pullback here, and it did not happen. We got a straight down move. And based on that, I have updated my current outlook on this chart with this count. Let me just show it to you guys. From this point of reference, we have what you will call let's call it an A leg down followed by a B up. Actually, B is still continuing. That's the take. B is still continuing as a triangle here, possibly could be taken as some other formations. And once that leg is complete, we are after that seeing a formation for the downward movement as a diagonal. Yes. So that's the count we have right now. And those of you who are not able to make sense of this, what we are really seeing here is on the rough and right hand side. Let me just explain very quickly. We are seeing an A down, B up, and C down. Basically, a corrective structure in Elliott Wave terminologies, which consists of three legs called A, B, and C respectively. By the way, I'm not very confident about the position of wave B. I think it is better to count it complete over here. Right. Anyways, so the take remains that once this A and B is complete, we are going to see a leg down. In this case, the C leg has gone much lower than the end of wave A, which is a little bit unusual, but not unusual for this chart of Bitcoin. On Bitcoin, I'm seeing a lot of this kind of activity, right? And generally, we want to see five legs within this wave C. So if this is the C, then we want to zoom in and see something like one down, two up, three down, four up, and five down. So in this particular case, we have sort of completed the one and two. That's our main take. And this three is most likely complete here. So we are looking for sideways movement for four, and after that, another leg down, which should take out the last low of 58504. That's the main theme here. There is an alternate view which is suggesting much more bearish count, which is suggesting that this three is still continuing and it is actually situated at a much lower level. And in that case, the market can go much lower and give us extremely bearish movement. So I'm not going to discuss that count as that only activates after the market takes out 57,000-ish level, right? So till then, our main take or H1 remains bearish on this counter and target minimum remains lower than 58477. Uh, of course, keep in mind, everyone, that we are using this data feed. So if you are using some other data feed, the price levels, targets, and everything else will have a little bit of variation. But then again, if you are trading, you already know what I'm talking about. With that being said, we have at this point in time discussed all the main charts which we discuss in every single one of our webinars. And those of you stayed with me till the end, thank you very much. And lastly, again, very small request: if you guys are liking this content, do not forget to hit the like button and, of course, share the content, which is much more important, so that we continue seeing an uptrend or an increase in the views. And forgot to make the announcement that we'll be starting our new upcoming training program LT, which is the personalized classes batch in the month of July. Those of you who are already enrolled in my video course and have completed it are eligible to apply. I am only working with the people who are serious and have completed my video course. So that's the eligibility criteria. If you are there, you can head over to my website 50is.com and check out the training program LT page and fill out this form, right, to request the details. This is the link right now at the top of your screens, right? And that's about it for this webinar. Thank you guys for staying till the end, and I'll see you guys in the next one. Take care.